Good evening and good afternoon to everyone. Markets, trust, and the purpose of business. One of the hottest topics that's being discussed at this moment in time. I'm very fortunate to be joined by a very dear friend and one of the most passionate people I know on this topic, Julie Hill, who needs no introduction. That's all in the profiles. We'll also be joined by video clips by another dear friend, Catalano, as well as Karim from Dubai and Anil from Zurich. Before I bring Julie in, let me just kind of level set this. Obviously everyone's talking about the purpose of their business. Companies are piling in. Some are authentic, some are not so authentic. The Business Roundtable here in the US recently announced multi-stakeholder capitalism, that no longer shareholder return is the preeminent focus of business. So there's just a lot of talk, a lot of chatter, and a lot of it's confusing. Lots of acronyms like ESG, CSR that are flying around. So Julie, let's jump straight into it and talk about, so what is this in fact, and why is it important?
What is the definition of purpose? Why is it important?
Yeah, what's the purpose? What is this purpose of business? What's everyone talking about, and why is it important?
Well, traditionally, I think it was Milton Friedman who said the business of business is business. And I think we've grown up. We've decided that we have a broader perspective. This is stakeholder capitalism. And it's interesting to me, the pandemic and with the racial unrest, I think it has exacerbated of inequality, structural bias, structural racism. And I think this has heightened people's perspectives on what a purpose of an organization ought to be.
Okay. Are there good examples of organizations that you think that have an authentic purpose that transcends just shareholder return?
Well, I can speak from my own experience. I'm on the board of a mutual fund called Lord Abbett, $200 billion under management. And they, about 10 years ago, became interested in ESG filter funds and started programs where stocks were picked based on what the ESG ratings were. And it's only more recently that there's been research done that the long-term value of a corporation is enhanced by higher ESG ratings. I would say Lord Abbett is an excellent one. They are redefining their own culture to be more in line with global reporting initiatives. And I think that this is a trend that's going to exist for some time to come now.
Okay. A little bit controversial, I guess, but why do we need to be explicit about this? Because surely if a company wants to maximize its value, whether that value is in profits or shareholder value, doesn't it have to serve its customers, society in a positive way? Otherwise, it ultimately will be punished either through lower revenues, lower profits, or lower market cap. So why do we need to be explicit at this time about this?
Yeah, I think that's the whole definition of who the stakeholders are. It's not just who we report our financial metrics to. I mean, you can get good financial metrics and still be a bad person and a bad corporation. So I think this sense that we are accountable to a broader perspective is what this is all about. I mean, it started with the environment. GR contemplates the environment, but it also contemplates human rights, corruption. And I think I go back to the psychology of a human being. If we don't have purpose and meaning in what we're doing, we're not going to create the best opportunity. So I think we're just getting there. We're growing up on a corporational level.
Yeah, and that's a really interesting notion, Julie, because often we say, as an individual, never pursue something purely for financial gain. Pursue it for your passion or something else, and the financial gain will follow. So it's kind of interesting. We're kind of jumping onto ethics and trust, so I might ask Bryant to play a brief video clip of Anil and Karim talking about ethics and trust.
I think trust is a product of both competence and character. And I think what's happened is, with the pandemic, we're focusing a lot on character. And it's becoming very, very clear that humans are really looking much, much more for simpler solutions around character. And we're finding that information is flowing so quickly that people are really looking for clarity around leadership. And I think what you found is that the pandemic has exposed a lot of frailty around what our leaders are doing. And it's becoming very, very hard to really define a way forward because we're seeing so much inequality.
Ethics on the top level are really important because ethics goes downwards. Okay, ethics from a leader is top down, and the reflection of that is trust, which is bottom up. So if the leader is ethical and showcases consistency in ethics, he also gets the trust of his people, the employees, the ecosystem, the stakeholders, and fundamentally the customers. And I think we should not underestimate the importance of this in times of turmoil.
Great. Thanks, Anil and Karim. Some good insights. So, Julie, when we think about ethics and trust, we don't want to talk about political leadership globally. We'll talk about business leaders. How would you measure their performance in the last 6 months? And is there a road that still needs to be traveled in terms of ethics and trust?
Well, let's take one issue as an example. Structural racism, systemic bias. Right after the George Floyd murder, there was a tremendous outpouring. Lots of CEOs posted opinions, heartfelt and so forth. The question is, the jury's still out. What are they actually doing? Are they optimizing this moment? Are they taking the opportunity to look internally in their organizations? Will they actually put actions behind the words that they said? I think we don't know that yet. But I do know that the big institutional investors are watching. And so I'm on the Anthem board. I chair the Nominations Committee. And I am in the middle of working on what the proper metrics would be for our company to report on our progress. I think this is a conversation going on in a lot of rooms across America.
Yeah, no, it's great, Julian. We're going to jump into metrics. I'm going to give you a quote from a business colleague, Brian Looney, who's the newly installed CEO of BP. And I think it's kind of important. He said the anxiety of his employees weighed on him heavily, as he did this re-announcement. And the specific area he said, and this gets back to your human question, was that the personal purpose of the employees was misaligned with our corporate responsibility and corporate purpose. How important is that in terms of that? And that for a CEO, that's pretty profound, I thought, particularly from an oil company.
Well, that's brilliant coming from BP. I think that is spectacular. It's healthy. It's a recognition. It's so interesting. I have a millennial aged son who's 35. Mm-hmm. That age group takes this for granted. And they're pushing us to understand, of course, purpose matters. You just think about, if you can't bring your whole self to work in a way that the millennials talk about, you are never going to be able to contribute fully to a corporation. So you get corporations that don't have great products, great service, without having diversity and having lots of opinions and having each person their whole self. And if you have a whole group of people who are disenfranchised within that organization and kept back, learning organizations are the ones that will succeed in the future. And to hear BP say that, the last CEO of BP, I wish he'd gotten that. They're farther ahead than they are now.
Absolutely. That's a panel all by itself. Thank you, Julie.
You're welcome.
I will just touch on the point of values here. How important is corporate values in this? Because I notice a lot of corporations, actually, they don't have well-articulated values, or they change every time you get a new CEO. And a lot of people have often said to me, you can make these public pronouncements, whichever position you take, but it has to be anchored in your values to be authentic. How do you think about that and, and your own experiences with the boards you're on in other companies?
I think we're kind of on a continuum of understanding what that means. Some people want to use that just as a jargon, your mission and values and so forth. Yep. And other people basically understand that there's a connection between value and values. And over the long term, people vote for a product or service with their feet. And if there is a lack of integrity, if there's a lack of coherent understanding of what the value proposition is, backed up by some just basic good human being values, then I think the company will suffer.
Okay, that's interesting. Yeah, value and values, that's quite a really interesting connection. So we'll see how that develops. I'm going to kind of switch now to the topic of immediacy. And and we're going to play a video clip in a minute, and then we'll jump into it. But there's clearly a tension between the markets and their short-termism, and the longer-term nature of the structural challenges that we face. So I might ask Karim and Anil to give us some insights there, and then we'll jump into it, Julie.
One of the issues that we have is we've moved into kind of immediacy around thinking. So people want their results tomorrow, but the problems are generational in terms of how we have to think about things. So ESG, many of the ESG issues are going to take years to solve, but people want results day after tomorrow. And I think what you've got to do is, long term is a best practice. Long term is where we need our thinking to be. However, people want results tomorrow. And this is a big disconnect in the way that the world is thinking about things. Just as if you look at the pandemic, what we're looking at is every day we're looking at the number of deaths, the number of cases. But the solutions that we've got to think about have to be a lot more enduring than what the world is offering.
So, Julie, I want to give you an example of this, what I think is a big disconnect. So many people won't be, I won't give all the details, but there was a egregious ESG incident with Rio Tinto, where they destroyed and dynamited a 45,000-year-old cave that was sacred to an Aboriginal tribe. It wasn't against the law, but at a level of ethics and trust, they breached everything and really didn't respond very quickly. And then there was a massive outcry, first at a governmental level, then a major pension fund in Australia that was a major shareholder, and then the Aboriginal communities. And after about 2 months, finally, the board also was out to lunch for a while. Eventually, the CEO resigned, and 2 of the 10 people at the C-suite resigned, head of external affairs and the CEO of the business unit. However, their stock price didn't even budge, and in fact, is at a 12-year high. So how, yes, we have Anil, this is important, but boy, the markets didn't seem to think it was that important. Why the disconnect? How are we going to bridge this if it's that important?
Immaturity, I would say. We haven't moved along very much in our perception of what a good corporation is. This is why this whole movement started. If the business of business is business, then the markets wouldn't look at that as an egregious lack of leadership. But if you had a broader stakeholder base in mind, including all the people who were harmed with this, the leadership would have brought it in. This is what goes back to this perception that over the long term that you're talking about, these ESG issues will matter. And it was interesting to me, the Colin Mayer of Oxford University, who was the one who did the British Academy study, basically said that the purpose of the corporation is to provide profitable solutions to problems of people and planet while not causing harm. It's that last bit, while not causing harm. I'm bad these guys got fired, frankly. They needed to be.
Yeah. Okay. Actually, let me jump on to while not causing harm. Actually, I was just on a session this weekend that the Rockefeller Foundation and Brookings Institute was doing it with the UN on the SDGs, and I'm in room 12, which is the circular economy. But one of the things is they felt that the bar of do no harm is actually too low, and that, in fact, business, as they partner more with government, needs to elevate themselves to not doing no harm, but doing good, and being positive contributors in development and social and other objectives. Do you think that's reasonable? And where are we on that scale, and what do we need to do to kind of progress?
Well, I think it's reasonable, but then I'm an optimist. I have an optimist gene, and I tend to look at it this way. I go back to the sense that we're a continuum and we're learning as we go. We still have to prove that by doing good, we can make great profits, and that by having the circular economy idea that it will pan out over time. California is doing a tremendous experiment with Gavin Newsom. There are people who are working on this kind of economy, but so far these organizations that are set up to be for benefit are as yet unproven. But we need to be able to get people to understand what it means, help them attract financing, do some testing of these organizations. I think we'll get there. I think, I go back to this comment that I think the multiple layers of plague that we're dealing with right now in so many different ways are kind of loosening people's thinkings. Maybe there's a better way to do things. My hope is that this innovation will be spurred on by the fact that we've all had time to think about this a little bit more.
Yeah. And it probably suggests too that, and you kind of mentioned that with financing models, et cetera, that there's a lot of business model innovation that's going to be necessary to do good and be profitable at the same time. Do you think that's a big deal, or is that just something that'll happen over time?
Well, I'm hopeful it's not a fad. I think there's such existential threats in our planet that people are finally beginning to understand. I mean, I lived through, and as you did in California, just massive amounts of smoke. And people are understanding that this isn't just people setting fires, this isn't just poor forest management, this is knock-on effects of climate change and the massive storms and the frequency of storms. So I think people are going to understand that something's really happening here, and that business has a huge role to play. That the GRI initiatives are not just for business, they're for governments as well. 17 sustainable objectives. And I think if we can this international understanding of what's important. We at Anthem are pegging what we do in sustainability to the GRI and trying to understand how we fit in. And I hope more big corporations will do that.
Yeah, no, I think that's important. And I think we'll jump in a little bit later to the role of government and how businesses partnership. I want to kind of get into the area of metrics and KPIs and how we measure this. And you and I have talked about this at length. So again, we'll jump to Anna and Karim and Anil a little bit to level set us, and then we'll dig into this a bit more. So Bryant, play that video.
In the financial world, where we invest based on finance, Wall Street and investors have been trained to look at a set of financial results and key performance indicators that give them an idea of where a company is headed. And they base their decisions on that. As people say ESG becomes more and more important, obviously, other than just results in ESG, it's important that we begin to develop some performance indicators that show that a company is moving in the right direction. How do you see this evolve, and are you seeing examples of where this is being done in a very good way?
I think your question sort of points to a lot of the thinking that's occurring in the industry. And where I'd like to start is really a recognition that 50 years ago, the investment world focused mainly on return. Then there was an evolution around risk. And I think now what we're seeing is there is an evolution around impact. But the question is, how do you measure impact? There's a lot of variability, both geographically and sector by sector. I think what we're finding is, people are starting to think about the results that they'd like to see. And we are finding that there will be metrics to measure how people are evaluating companies. If you look at Pepsi versus Coca-Cola, they have a very different imprint on the amount of water that they use for their production functions.
So Julie, how close are we to metrics? Because it's really important. I mean, if you're looking at companies, whether you're a consumer, investor, to be able to compare and contrast. Is this company doing better than this company on impact, ESG, excuse me, or whatever? How far are we away from a, kind of FASB, accounting standard kind of level set of metrics? And what do we do in the meantime if this is kind of far away?
So relative to the investment industry that I'm involved with, there's a working group in the investment councils on SASB to come up with some standard metrics. The problem that I see and why this has got to be such a thoughtful process for each company is this concept that what gets measured gets done. So if you get the wrong metrics by leaving something out that's even more important, you are guiding the company in a certain direction. So we're, for example, at Anthem, right in the middle of trying to understand, first of all, how much of executive compensation ought to be tied to these type of metrics. That's all over the board if you do the research. I believe that unless that happens, that people use this as a nice to have rather than an integrated part of their business. But I think every organization has to be very thoughtful about what really matters in their industry. And then to get to a point where you have a standardized framework so people can compare and contrast between companies, we're a ways away from that. And sometimes I think we get too clever by half, as the Brits say. We try to measure too explicitly. And it's kind of like this is going to sound really weird, but someone said to me one time, the definition of pornography, you kind of know it when you see it. The definition of a good company is you will know see it when it has a good story to tell, when it is consistent over time, when it's honest about its base case that we aren't where we want to be. Here's where we are now, full disclosure, but here's what we're setting in place over time. So for example, one of the things I'm working on is within a company that's got almost 80,000 employees, how do we measure what that's like for subgroups and subcultures within the organization? So what happens not only our hiring practices of Black applicants, but how do we retain them? What are we doing to make certain that they have a good experience, that they are given opportunities? So when you drill down on metrics, you can't simply say, well, we have X percentage of whatever ethnic group. You have to say what their experience is. You have to tell a story of what you're doing. And you have to be a learning organization and perhaps even explain that bit of learning that you've had going on.
Yeah, it's important. Actually, two things about this. I like your kind of characterization. You know a good company when you see one. And I think that's asking for CEOs like Bernard Looney to speak more expressively and how they really feel. But compensation, we often say people behave in the way you incentivize them, right? Schneider Electric was telling me this morning that the CEO just readjusted all the executive suite compensation to be like 60 to 70% weighted to ESG, which is kind of wow. That's a first.
That's amazing.
It is amazing. So how important is this compensating of executives and holding them accountable in terms of bonuses, et cetera?
In my opinion, it's critical. Mm-hmm. It's critical because what it says is that the board is telling you this is important.
Yep.
Not telling you that it's something nice to have, as I say. But again, what gets measured gets done, what gets compensated for gets done. I went through this with an Australian company that I won't name here on the issue of gender bias.
Right,
and no one would allow me to get that into the CEO's compensation criteria. And the response, it was such a circular argument. The response was, well, I'm not going to put something in where I know I'm not going to succeed. So it's like, well, okay, then when are you going to succeed and what's going to make you do that? So I think you really do have to have, it's kind of a carrot and a stick in some ways.
Yeah. So if we think Schneider Electric's an outlier and most companies are not compensating their executives in terms of incentives weighted heavily to this kind of not just a financial return or shareholder return, what's the role of boards in this? Because obviously, ultimately, executive compensation, boards have a big influence on that through executive compensation committees, et cetera. What role do you think boards have, and what advice do you give to people that are on boards? What do we need to do?
Well, for one thing, boards of directors have to be learning organizations as well. They have to be organic and growing. And what I'm finding on the boards that I'm on is that you have some people who have kind of settled into a paradigm of the way the world was and have not moved on. So the culture of the board hasn't changed. So to me, it is imperative for a board member to stay current, to read, to understand socially where we're going, because otherwise we're going to miss this. We're going to miss all the change that is happening. So I think it's incumbent on boards to educate themselves and to be sounding boards for management in a sense of we're supposed to be bringing a diversity of perspectives and to be a sounding board for what I'd consider to be the old paradigm. And I looked at some statistics, and I think it's maybe 5 to 10% is the highest percentage of incentive comp devoted to these issues so far across the board. That's a start, but it's not going to keep a company as current. There are massive changes going on in our society right now, and the customers that we have are living through these. And I think if a company is not responsive on these issues, which tracks back to a board making certain that you have the attention of the CEO by making comp dependent on the changes.
Yeah, I think it's really important because I think because clearly we're in a transition phase. If markets aren't holding companies accountable yet, i.e. that mining incident that I talked about, if executives don't have compensation sufficiently tied to that performance, there's no incentive or disincentive for them clearly to really lean into these issues and do well, other than kind of an ethical, moral basis that they may or may not have, right? So I think...
I think for boards periodically to stand back and get some outside perspective, futurists, people who are sociologists, people who understand where we're going. Because my concern is if we don't, a company ossifies in place, it gets left behind. I obviously, your viewers could probably tell that I'm more left than right, but I actually, this is part of where the world is going, is a greater understanding of responsibilities to broader stakeholders. If the board isn't aware of that and used as someone who can bring that kind of insight, I mean, the operators are struggling every day to keep the company together while this is all happening, to keep people together, to meet objectives. In the case of Anthem, there's been a significant impact because of the levels of illness and so forth. So you understand that that's their daily job. We're not operators, and we have the luxury of stand back and be reflective and to think about this and to listen broadly and try to understand the currents that are affecting our customers. That over long term, if we don't pay heed to them, is not sustainable for the corporation. It's a risk factor.
Okay. Not to pick on boards, but I guess what you're advocating, I mean, I love the notion that not only do organizations have to be learning organizations, but so do the boards. And, one person, I can't remember who it was that said, one of the number one attributes of a future leader is going to be curiosity, the ability to kind of look outside their four walls. Just on boards, one last thing is that, boards are really heavily geared towards governance. And what you're advocating, I think, is boards to take a much more strategic, forward-looking role, as well as their governance responsibilities, but really broaden the lenses by which they look through the business and the overall environment. Again, does that shift occur just at an individual board level, or is there something more systemic and structural we can do to accelerate that?
I think most boards, at least the ones that I'm involved with now, consider good governance just taking mistakes. It's not really the job of the board. You want to be certain that we're ethical and that the engines run on time and we do what we say we're going to do. But I think our world is changing so quickly that boards are a good source of diverse perspectives. That's why it's so important to recruit a diverse board, because you can get stuck in a paradigm. And I use Anthem as an example. It is in Indiana. It has a certain political perspective. 25% of our revenue comes from California, which is a different perspective. So you have to have all those perspectives, not just political, but on what we value, what we think is important in the boardroom. And the debates that I think are, we all do these kind of pro forma things that you have to do, but they're really good debates from my perspective, or the strategic debates on a board. And most of the companies that I've been involved with have been very open about their strategy, and it's a collaborative effort. And actually have done recently what I mentioned before, and bringing in, for lack of a better term, futurists, but people who are studying trends, who are understanding where we're going and how it affects our consumers.
Yeah, I think that's some really positive takeaways because I think too often, whether it's through the media or whatever we read or view, that we don't get these perspectives, that, companies are changing. And I think, too often the media kind of characterizes, business as evil for some reason. But I think it's good to understand, there's a lot of positive things happening, and, business is a force for good. I'm interested in, you talked about Anthem linking a lot of what it's doing to the SDGs, to the 17 goals that have been done. Can you talk a little bit more about that, how that's done, why is it important, and any changes, by doing that, any changes you've seen in thinking and perspective as a result of doing that? And just so just quickly, the 17 Sustainable Development Goals set by the UN cover everything from, the right for education to health to power, to circularity, to just, etc. So it's pretty broad encompassing, but interested, Julian, the experience.
Well, for me, I've probably been talking for 20 years about ESG. So within this organization, I can tell you it has absolutely moved and changed. And the brilliance of the GRI is that it gives you a framework against which to work. So we didn't decide that all 17 objectives were pertinent to our business or that we could affect everything, but we picked the 9 pillars that we thought were important to us. And it was a way for, we have a phenomenal and a young man who heads all of our sustainability efforts. And it was a great way for him to bring the board along. Some people had never even heard of the GRI, but just say, this is what's happening. This is what's being done on a global basis. And then we picked the 9 things that we thought were more pertinent to us and used comparators so that we could understand how we were moving. Part of it was education on the board. I think kind of all up to speed now, but it was a way of saying, this is not just doing good. These are global initiatives that people who have thought this through are really strong about and positive about, and we need to be a global citizen. I think that's the fundamental conversation that a board can have with an organization. Are you a global citizen? And if you aren't, why not? If you are, what do you aspire to do with that?
So a couple of, we're coming down to the last quarter hour, but a couple of points, and obviously in the theme is the word trust. And, Edelman puts out the trust index. And really, and that indicates that people have a very low level of trust in corporations, probably a low level of trust in government. So since we're focused on business, how does business elevate that trust it has with society in a way that's meaningful? Because I'm not sure there can be progress on what we're talking about until we kind of build trust, which is at a human level, we know is very vital. So how do we do that, Julie?
I think you do it in the same way you would with a friend. You don't let them down. You do what you say you're going to do, and you're consistent over time. It's interesting. There's an organization I just heard of called BERA, BERA, and what they're trying to do, it's a startup, what they're trying to do is test brands for trust on some objective scale. I'll learn more about it. The idea is, the concept that a brand is a promise. Have you kept your promise is the way that this is being measured. And I think that is really important. And trust, as in a friendship, is made up of the decisions that you make consistently over time.
Yeah, and we all know, and even at a personal level, trust takes time to earn, and it's very easy to lose in the blink of an eyelid. Right? So, and it's something that needs to be nurtured.
It does. And this goes back to the whole idea of authenticity. If you can authentically bring your whole self to work and you're not cutting off part of your personality, we all like to think of ourselves as a good friend. And if we can think about that as part of what we bring to work with us, I think we do a whole lot better. And I'm also fascinated by this whole thing that's happening now because of the pandemic, where I gave a presentation the other day at Lord Abbett, and I had 450 people in my study, inviting people into your home.
Wow. Yeah.
And my son, who's 35, gets his 1-year-old handed to him every day at 6:00, whether he's on Zoom or not.
Yeah.
So his coworkers know. So we're bringing our whole lives together, which I think is humanizing the workplace. And the more human we are, the more we need trust amongst ourselves, and the more we need trust in our organization. So I think there'll be, the sociologists 5-10 years down will have done studies about where we were before and what happened when we all kind of came to this same place on Zoom, where if your phone rings, it interrupts a meeting, and so forth.
Yeah, and nobody's ashamed anymore. Yeah, no, I agree. I think one of the great benefits of COVID is that authenticity that it's brought. And nobody has their organizational armor on. One story I'd like to share was a few years ago, we did the faith-based dialogues. We went to the Vatican with Cardinal Turkson. This was through the Kellogg Innovation Network work we were doing with the mining industry. And Cardinal Turkson, who's president of the Pontifical Council for Justice and Peace, he said that the church and other faiths were kind of ruminating on the issue that people of faith and business leaders of faith, for some reason, when they walk through the front door of their office, they made decisions inconsistent with their faith, yet the church knew these people were of faith. And they said that that human condition puzzled them. So that just reinforces your point, Joe. We need to turn up with our real person, our real selves in business each and every day.
We need to be all lined up. We need to be one human being, and that human being functions with their values outside of work and within work.
Right, one human being, I love it. So as we count down, we can't leave any discussion without the role of government. So we might play the video on the role of government, and then we'll comment and then wind down.
We need to keep in mind that a new solution, new problems in the marketplace require new responses. We cannot simply say it is what it is. This is also an opportunity for governments to create some kind of positive ecosystem. Okay, it's not appropriate necessarily for governments to try and do innovation. What they should do is two things. One is they should create a positive, healthy ecosystem. And the second is they should just get out of the way and let the entrepreneurs do what they can. We need to make sure that these companies are responsible for the kind of information they have access to. Because data, personal data, and actionable information and actionable intelligence is tomorrow's currency. And we need to make sure that it is shared fairly rather than being cornered by individual companies or industries. And we recognize the impact, positive or negative, in how this is used and how this ultimately impacts the person whose information it is.
So, Julie, we hear a lot in the SDGs that it was like, government's under stress, we all know, and the solutions are such a magnitude. Everybody talks about this will take a public-private partnership. Again, you're dealing with a lot of these issues. How do you think that manifests itself? And I like Karim's view of government should set the positive ecosystem and get out of the way and let business do it. How do you think about public-private partnerships? Obviously, health insurance is a big area, but more broadly?
Well, I don't know if you can say anything about government right now other than it's a mess. Mm-hmm. I mean, I don't know that we have yet to figure out how we get ourselves back together again so that we can function. And there's obviously a role for government in business. But I think we've looked at this for so long as a punitive. I mean, the insurance industry is highly regulated. And to try to walk through the morass of regulations is a full-time job. But there are bad actors. So government needs to be an organizing mechanism that holds people accountable. I'm thinking, for example, about stars ratings on Medicare, which is it's an interesting innovation out of CMS, which basically says if you're not doing the things that we believe should be for Medicare clients, we're going to lower your stars ratings and your reimbursements are a multiple of your stars ratings. And that's one that really works. So I think there's definitely a role to play, particularly in insurance. But I just wish we'd get our act together and start functioning as, one human being, one country.
Yeah, and I think that's a fantastic phrase. You've brought us some wonderful insights, I think, Julie. But I think the human level that we've discussed, I think, is the most profound for me. About. And we could talk about company purpose, but purpose is a human question, first and foremost. That it's all about being one human, bring the authentic whole person to work. And I think maybe one of the benefits of COVID is that it has caused us to bring our authentic selves more and more into the workplace. And one can only hope that does not go away. I think your notion of our connection between value and values is something that's still got to play out. And how business needs to think about the measures are across not just financial, but all these areas and deem them as important. But whilst we're waiting for metrics, I really like what Anthem is doing is linking strategy to SDGs where appropriate and kind of measuring yourself to that. And then I think as well, the board role and compensation, incentivizing individuals and organizations to behave in the way that society's expectations are. And finally, we all hope, that government elevate all around the world. I think no one's happy with necessarily their governmental responses. Maybe my homeland, New Zealand, being an outlier in all of that. Julie, I want to thank you very much for the time you've spent with us, and it's been an enjoyable conversation. We can carry on for hours, I believe. So again, thank you, and I'd just like to thank everyone for listening, and hope you all join us again at 7 p.m. Chicago time. Thank you.